2025 is shaping up to be a politically fascinating year. The 119th Congress is poised with a slim Republican majority in the U.S. House of Representatives and a 53-seat hold in the Senate, marking the first time since 2017 that Republicans will have unified control of both chambers in Congress. Several key votes are on the horizon, and in the coming months, there are a number of important areas where congressional activity will be critical, as well as regulatory activity for political action. What could this mean for the financial sector? I'm Michele Lieber, Global Head of Government Affairs and Regulatory Strategy at FactSet. When my colleagues approached me and asked if I would be one of several subject matter experts at FactSet to do the new podcast, I agreed to do so with the expectation that I would have some wonderful guests. My first guest is someone that I really wanted to have the opportunity to speak with, Matt Hoffmann, who is joining us as practice co-head and financial services principal at the Washington, D.C. public affairs firm BGR Group. Most recently, Matt was staff director for the House Financial Services Committee and has expertise across banking, capital markets, digital assets, crypto industry regulation, budget tax, and fiscal policy. Matt, welcome and thank you so much for joining me today.
Michele, thanks for having me. I really appreciate it. Looking forward to it.
Let's talk about how we should look at the first 100 days. In my career, the first 100 days has always been kind of a litmus test for how an administration will fare in the coming term. And I wanted to ask you how this first 100 days should shape up from your perspective and what's a little different about these 100 days.
It's a great question, and the first 100 days is a standard for measuring how a new president in his first year is going to operate for his term, and it typically is a standard for analyzing what could happen. It's a pretty good one. I would say that 2025 is shaping up to be a unique one, mostly because of the deadlines that already exist in this calendar year. When we ended 2024. Congress was trying to figure out how to keep the government open, and they passed a spending bill that kept government funded through March 14th. So that already sets up our first deadline in Q1, right? So we're already at January 14th, and we're about 8 to 10 weeks away from Congress having to pass another bill to keep the government open. The second thing to keep an eye on this year is debt ceiling. So in 2023, Congress and President Biden figured out a way to solve the debt ceiling problem, and they effectively suspended when that would be an issue until January 2 of this year. At the end of December, Treasury Department put out a letter saying that while the limit was scheduled to be hit on January 2, the date at which they would have to start using sort of extraordinary measures, tools they have in their toolkit to keep paying interest payments, that would not happen until January 14th or thereafter, which indicates, if we use the previous debt ceiling experiment as a guide rule, that sometime the summer of this year, so June, July, August, Congress will yet again have to come up with a solution to the debt ceiling. And then, of course, at the end of September, the government's fiscal year comes to a close, so we'll have to have another government funding conversation then. And then the big issue for this year will be the end of December, when a number of tax provisions that were created in the Tax Cut and Jobs Act that President Trump did in 2017, they're set to expire at the end of December, along with Affordable Care Act health insurance premiums. Those are subsidies that help people afford health insurance on those ACA exchanges. Those subsidies are also set to expire at the end of December. So those are sort of four key moments: March, the summer, September, and December, where Congress has to act. Otherwise, a sort of a momentous an event will occur, either when it comes to government funding, global finance, tax preparation, healthcare issues. Those deadlines are very real. And for Congress, they have to start making decisions now in order to prepare for those deadlines. And I guess the backdrop to all of this is how Congress is going to deal with, and as you mentioned, it's a unified Congress, how they're going to deal with something called reconciliation. And reconciliation is a tool that legislators have to move bills relatively quickly, particularly through the Senate, using sort of 51 votes in the Senate as opposed to the normal 60. And so, given the makeups in the House and Senate, there's a world where they can pass legislation using reconciliation and require only Republican votes to get it done. And so that's the backdrop for all of this. But those four deadlines are really going to drive the decision making process from here on out.
Matt, maybe we should discuss a prior role you had where you served as policy advisor to the speaker. And some of the deadlines, like reconciliation and debt ceiling, happen regularly. Can you talk a little bit about that and how that can present some challenges for the incoming administration in Congress?
Sure. So both reconciliation, even the debt ceiling, government funding, these are not pieces of legislation that just sort of miraculously arrive on the House floor. They take many months to put together, and it gets increasingly more difficult as you get closer to a deadline. So, for example, the government, in December of 24, when they arrived at a compromise to fund the government, that extended government funding until March 14th. So, in the interim period, both the House and the Senate and Republicans and Democrats are going to have the conversation about, well, going forward. So on March 15th, what should we use things like top line numbers? So what should the top line number of government funding be for the rest of the fiscal year, which goes to the end of September? How do you then break out that top line number into other federal agencies that also need funding? And what are the trade-offs that either both parties and both chambers are going to need in order to secure a deal? And then how does that conversation relate to what the incoming administration is going to want to have? That's not a conversation that gets solved in a week or 2 weeks. It's going to involve multiple rounds of negotiation, multiple committees in the House and Senate, and then sort of a closing conversation with the White House. The same thing is true for reconciliation, although reconciliation has significantly more steps. So before you can unlock this legislative tool, both the House and Senate have to pass the same budget resolution. And the budget resolution is nothing more than a framework to explain how government spending will work and how the taxes that the government is expected to collect. That resolution itself, again, is not just a House exercise or a Senate exercise. In the context of reconciliation, both chambers have to agree on all the numbers inside that framework. And again, that does not happen overnight. It is an ongoing conversation. And in reconciliation, particularly because it is something that can be passed in both chambers with only one party votes, presuming there's more than 51, again, it's an ongoing conversation that requires both hearings and negotiations between the two bodies. So you would expect that by the time we get to March 14th, there have already been a number of hearings and decisions made by leaders and the White House about what they want to see in these frameworks. My understanding is that hopefully in the next few weeks, with the committees getting stood up and the budget committees in both the House and Senate being able to notice hearings, we'll start to get some of those answers soon.
And then we'll also have to talk about expiring tax credits.
Correct. That's at the end of 2020, at the end of this year. In the entire individual side, a number of provisions in the TCJA will also expire. We also have the Affordable Care Act premium subsidies expiring as well. And so that means for the following year, unless Congress acts, they're disappeared. And we'd snap back to a tax code that existed prior to 2017. And what that would mean for both our debt and deficit picture are conversations that are happening right now.
So that just goes to the fact that we're going to have a considerable amount to accomplish in a very short period of time.
Very short time, the floor time, vote time. It'll be the largest constraint that this Congress and administration are going to face in 2025.
So this is not the first time we've seen this, but
No.
what we did see when when President Trump came in the first time, we did see a lot of activity in Congress to kind of do away with some of the prior administration's regulation. And the Congressional Review Act is a mechanism by which I think they had 16 CRA actions in the first Trump administration. What do you see with respect to some of the Biden administration regulation and how those will fare with the new Congress and the new administration coming in?
They are already teeing up to run the same sort of set of maneuvers that they did in 2017. So there will be a number of CRA Congressional Review Act rules that came from the previous administration, and they'll attempt to move those relatively quickly through both the House and the Senate, with Trump to sign them eventually, and they will then pull down or reverse and stop some of the Biden executive orders that previously happened.
I've also heard from folks who are working through how the new administration is going to come in and what types of things they're going to look at. I have heard that there's going to be virtually no appetite to slip controversial provisions into proposed rules without an expectation that um, folks are going to be watching the activity, particularly in Congress. Well, could you speak to that for a minute as well?
Yeah, I mean, by all accounts, the Trump administration is set to have a pretty active first week in office. Somewhere in the order of 100 of its executive orders will be coming out. Everything from streamlining repealing things like the AI rule that President Biden put out, and instituting new rules and bringing back previous Trump administration policies. So those will go rather quickly. And then they will start to move into the regulatory area of having some of the agencies put forward new regs. One thing to keep an eye on is how quickly these nominations start to move through. So this week, today, for example, the most of the cabinet level secretaries or nominees will be before the Senate having those hearings. And then the question will be how quickly they can then move to the floor to get voted on and then in seat. And from there, we'll start to move to other nominees as well. So, Mr. Atkins over at the SEC. We're still waiting to hear who the nominees might be for both the CFTC and the OCC and the FDIC. Three big keys for us in the financial services sector as we see how the rest of the year plays out. One interesting sort of relationship to keep an eye on as we go through this is the Fed, because of the prudential regulators. The Fed is the only one that effectively stayed. It will stay consistent from 2024 into 2025, and so as a result, a lot of the opinions and policies they had in place, we would expect that the view of that agency has remained unchanged. But with a new head of the OCC and FDIC, I would expect to see some dissonance between those bodies.
That's a really important point. We'll also see a new head of the CFPB, I expect, and they've had a lot of activity over the last few weeks. Do you want to speak to how the committee is going to look at some of that going forward, the House Financial Services Committee instead of banking committees?
Sure. There's a number of rules that the CFPB put out. The open banking rule, obviously, 1033 is probably foremost among them. A lot of concerns with how that, what impacts that will have, not just on providers, but on consumer data as well, and what that would mean. So I would expect, the committee will move quickly to try and address that, and then it'll just run into the gamut of other rules they have as well. Credit card fees being another one, things of those nature. And then it'll be a question of how does this administration want to pursue court cases that the previous CFP director had initiated, and what their stance might be going forward. We'll see this on the OCC, for example, with some of their bank merger pieces. And the question really will be sort of what kind of posture do these new nominees take, and what does that signal sort of going forward for the space?
It's funny you mentioned 1033 open banking and consumer data. And I was speaking with a founder of a startup, and one of the things they said was, "Well, Congress really doesn't matter in this whole big picture with respect to how the regulators implement their rules." And I don't know. What are your thoughts on that?
Well, I disagree. Although I will say that a lot of things that were discussed in legislation last Congress, whether it be the stablecoin bill or the market structure bill, there are a number of things that an agency could do on its own vis-a-vis rulemaking. One of the reasons you didn't see that last year, and I think one of the reasons you had sort of these holistic pieces of legislation make their way through is because you had an antagonistic regulatory apparatus that did not want to sort of make that kind of progress. I think former Chair Gensler would often say he didn't need new rules; the existing statute applied. So you're seeing this that sort of thesis play itself out in the Coinbase case, for example. So one major question that, or two, I should say, that are going to sort of come forefront of on the committees this year are with these new agency heads. So the nominee Paul Atkins for the SEC. What is his posture going to be on these existing cases? Number one, and number two, what is his reg agenda going to look like? Where is crypto going to fit in that? What does it mean for a disclosure regime? What does it mean for licensing, et cetera? And then how does that conversation relate with the CFTC? Because you would assume with the Trump administration a more quote unquote friendlier environment for crypto, that the agencies would be more proactive in some of their rulemaking cases. In that instance, some legislation might not be necessary. But there are other things that have been made quite clear that the agencies will need statutory clarity to move forward with, and presumably you would also see, if not challenges from other advocacy groups about the direction they're headed in.
Yeah, and that actually brings another great point on crypto. So we have a new subcommittee that you guys actually started in the House Financial Services Committee, likely to have one in the Senate Banking Committee, but we're also going to have for the first time ever somebody in the White House tasked with digital assets and AI policy. How will that all work together, or do we not know yet?
It's a little early, but it is a sea change from what the industry and Congress are used to having in an administration. So before, when it was, I won't call it an antagonistic relationship, but I think there was a lot of education and a lot of trying to help bring people along towards sort of what the industry was evolving into and how consumers and the retail industry were playing a role in that. But there was it was not a proactive and collaborative work project, I would say. There was a lot of hesitation in moving forward with this. And so now all of a sudden we have an SEC chair or a potential SEC chair who has talked about the crypto industry favorably. You have a Treasury nominee who is deep into into crypto. Same thing with a Commerce Secretary. And now we have a crypto and AI czar in David Sachs. So all of a sudden we went from sort of an antagonistic, I won't call it antagonistic, maybe that's a bit much, but we'll call it I'm trying to think of a good word for
Less friendly.
Yeah, it was more, it was much slower process, right? Maybe do it that way. It was a much more iterative process than I think we got much progress out of, despite the votes at the end of the day. But now all of a sudden we have this where it's glutton of riches, right? We've got all of these tools at the table who want to see crypto succeed, and really it comes down from the president and the promises he made during the campaign. Probably, I would say, first and foremost is making U.S. the center of the crypto world. And so as a result, you're now going to have a collaborative Treasury Secretary, and probably the two most important underneath that being the SEC and CFTC, wanting to work with Congress to establish a work product where the regulatory posture matches up with the legislative posture. And maybe you don't need to solve everything in one giant bill. You can figure out what the agencies need to have solid legal grounding, and then what the Congress needs to put together to provide that. So I'm quite optimistic about where they're going to go with this, particularly given the views that we've seen from these nominees.
I did hear recently an interview with somebody who had participated with the current administration on AI. And one thing that they were saying was that there was a very different view with the Biden administration versus the incoming Trump administration on what to expect with AI regulation, and whether it's a question of regulating or innovating, and creating guardrails with the path to innovation. What are your thoughts on the future of AI? And it is kind of the bright shiny object right now. So I would love your thoughts on that.
I think we're going to begin with a discussion about the previous administration's EO on AI. The Trump administration has indicated that they would like to do away with it. So then the question becomes, what do they replace it with? And I would say, unlike crypto, AI legislation has been uh, largely a thought process at this point. So there's been various working groups, both in the House and the Senate, and they have been sort of established and given marching orders by the leadership in both chambers. So they're taking this very seriously, and they're sort of looking at this in a holistic sense, sort of like, what is AI? Does it mean? What is the difference between AI, AGI? And then I think once you get past that initial the conversation, it then boils down to, so what does this mean for the various sectors? And so it would not surprise me if we started to have the committees over at Financial Services Committee, the now current chair led an AI working group in the last Congress to pick up some of the work that had happened and then be more specialized or specific about the policy prescriptions they put forward vis-a-vis AI affecting that particular sector of the economy. I think one thing you'll run into quickly is we'll talk about AI conceptually, and then when you get down to the specific use case, when we're talking about how AI affects sort of trading algorithms for one way, that's a different conversation than how AI might have than how AI might affect free speech or on social media. So you're going to have different issues and different pressure points around AI, and we'll look to the administration and obviously the crypto and AIs are for sort of the direction the administration wants to go in.
So after 9/11, the insurance industry faced a lot of challenges because of the destruction and devastation. We've recently seen terrible devastation in Los Angeles, um, incredible loss of life and of property. And I wanted your thoughts on kind of how you think it'll shape up at the federal level. Most of the work at the state level in insurance will be focused on rebuilding or kind of accounting for the destruction. But what are your thoughts on within the committee, the insurance perspective, and also kind of how that fits into this whole discussion about ESG and the future of ESG?
Yeah, that's a big question. Okay, so
Sorry.
I'd say it's a good one. I would put it in three buckets. So I'd say the first is your immediate short-term bucket, and the membership, the Congress has already started to discuss it about a federal funding that will be needed for an emergency package to help California out. So that'll be the most immediate conversation, and we've talked about that in the context of sort of the March 14th government funding deadline. So a Q1 conversation between the Congress and the White House about what's necessary to help California deal with the aftermath of these devastating wildfires is probably your first issue. But you're already starting to see, sort of getting into the second bucket, a question of, well how do we get in front of this for the next time? And so there's questions about insurance coverage in areas like California or in floodplains, and how do you deal with both the pricing and the availability of insurance? So you would probably see that conversation start to play out at the committee level. And then sort of the third bucket of this is sort of, where does this conclude in, and how does this play into the larger sort of, I would say, reconciliation, housing conversation that both the new incoming chairs of the Senate Banking Committee and the House Financial Services Committee have discussed as a priority for them. And so that's probably a more longer term project, but I would expect to see hearings in probably the first quarter around this issue.
Great. Well, we've covered a lot of ground here. Is there anything in particular that you wanted to touch on that we haven't covered yet?
To answer your question more generally, I'd say yes, stable coins. I think one thing you definitely keep an eye on for the next Congress or this incoming Congress is, what do they do with stable coins? Stable coins is, I would argue, for 25, one of the biggest items that Congress can help the crypto industry or the crypto sector develop to really scale into the next phase, because I think stable coins help navigate a area between traditional banking and between the crypto industry. It's a great way of helping onboard TradFi into the payment space, and then helping bridge new retail clients who want to use both crypto and TradFi. What is missing in that space, and I think you'd hear it from the prudential regulators, is sort of guardrails around licensing and issuing. And we have a very we have a dual banking system, and so the question is really going to be: at what point does the federal regulators have a say in the state licensing of some of these stablecoin issuers, particularly given how fast and widespread the use cases of these particular pieces of technology are? And that'll be it's something that is capable of being solved. I think it's a question of sort of find that balance between state and the federal regulators, and then also what role you want the Fed to play in that larger game.
Yeah, I remember there was a Ronald Reagan quote where he said the most terrifying words in the English language are "I'm from the government and I'm here to help."
Yeah,
And so, I think from our perspective, it'll be interesting to watch how some of these rules, regulations shape up, and how Congress works closely with or diverts from some of the way that they have in the past worked with folks in the administration
for sure,
um,
for sure.
as we move forward. Well, Matt, I can't thank you enough for joining me today. It's been such a interesting conversation. We've covered a lot of ground. There's so much to watch in Washington as the year unfolds. I hope I can ask. Maybe you could come back and we can
Sure.
kind of check ourselves and
Yeah, it'll be
see
fun.
if we've gotten it all right.
For sure. Well, thanks, Michelle. I really appreciate you having me on, and good luck with the podcast. And I look forward to coming back.
Yeah, we look forward to seeing all the great things that you do as you help your clients navigate some of these interesting opportunities and challenges.
We'll do. We'll do. Looking forward to it.
Thank you. And I'd like to thank our listeners for joining this episode, which was recorded on January 14th, 2025. You can find all of our episodes on Apple, Spotify, and YouTube. And thank you all for being a part of this exciting journey.
The FactSet Insight podcast is for informational purposes only. The information contained within is not legal, tax, or investment advice. FactSet does not endorse or recommend any investments and assumes no liability for any consequence relating directly or indirectly to any action or inaction taken based on the information contained in this podcast episode. The views shared by third-party contributors do not necessarily reflect the opinion of FactSet.